Hello, it's Gene Tunney here on the 1st of August 2020. There's been a lot of really big economic news this week, which I'd like to talk to you about in this video. We've had the US GDP numbers, which showed a huge contraction in the second quarter. We've had Australian payroll jobs data and inflation data, and the gold price has surged to record highs. So I'd like to speak with you about all of those news items this video. Okay, let's jump into it. This is the chart of the ABS's Employee Jobs Index. So this is based on single touch payroll data. And these figures are up to around mid-July. And what they're showing is that the resurgence of coronavirus, particularly in Victoria, has had a deleterious impact on the economy. We saw a drop in payroll employment in that week ending around the middle of July. Stephen Kennedy, the Treasury Secretary, told a parliamentary committee on Thursday that the economic shock is far from over. And so we're seeing that in the data there. The AFR reported that in the week to July 11, 1.4% of all Victorian jobs were cut, more than any other state or territory and well above the national average of 0.6%. Also, in Australia, we saw the CPI figure for June quarter come out, and unsurprisingly, it was a big negative. So it fell nearly 2% in June quarter, and that was related mostly to the free childcare that the federal government had brought in, and also lower petrol prices associated with lower oil prices. The stock market was down 2% on Friday, and that could be attributed to concern over coronavirus and what that means for the economy. There's a lot of concern about what's happening in Victoria. We've had some really big numbers, over 700 the other day. Thankfully, that's down today. We've got it spreading in New South Wales, and we've got the cluster on the south side in Brisbane due to, well, allegedly the young women who came back from Melbourne and lied on their border declaration, and they've been going around and spreading coronavirus. That's a great concern, particularly now it's been reported that a nursing home worker has tested positively for coronavirus. Really big concern. The big data release for the week was before I get on to that, I forgot about the Australian dollar. A few videos ago, I think it was, I talked about Michael Knox's analysis of the Australian dollar and how the improvement in the Australian dollar relative to the US dollar has been linked to Australian interest rates being higher than those in the US. Now, this has continued. The momentum in the Australian dollar has continued. And there also seems to be a view in the financial markets that the US dollar is weakening, and that could be related to concerns over coronavirus and the strength of the economy, although as I'll show you later, the S&P 500 has basically shrugged off all the bad economic news. But we see that the Australian dollar is up around 72 US cents. Michael Knox suggests, well, his model suggests that fair value based on the differential between interest rates in Australia and the US, when he estimated that a few weeks ago, it's around 69 to 70 cents. So we probably shouldn't see that creep or get much higher, but you never know with financial markets. They can be very hard to predict. Righto. The big news this week was the huge drop in GDP in the US. This has been misreported a little in the US due to the fact that the BEA, the federal agency that puts out these data, annualises the rates of change. And it's been reported that the US economy contracted 33% or nearly 33%, around a third. It didn't contract by a third. It contracted in the second quarter by less than 10%. But if that had occurred for 4 quarters in a row, the economy would have contracted by nearly 33%. So there's been a bit of misreporting of that, and there's a big difference between a 10% contraction and a 33% contraction, although the 10% quarterly contraction or nearly 10% quarterly contraction is bigger than anything that's been reported so far. It's absolutely devastating. It's just not the complete Armageddon situation that you'd have if it contracted by 1/3. There's a chart of the quarterly change in real GDP in the United States, which shows just how big that contraction in the second quarter was. Australia will have a large contraction in second quarter, so from April to June. Those figures won't come out until first week of September. Estimates I've seen, if I remember correctly, are around a 7-8% contraction. So it won't be as large as what was seen in the US, but it will still be large and bigger than anything we've seen previously, of course. There's been concern also in the US around unemployment. There's still very large additions to the unemployment pool every week in the US. Over the last 2 weeks, there have been increases in the number of initial claims for unemployment insurance. So that's the red line in this chart that I'm showing here. The blue line is the total number of continuing unemployment claims, and you see that that was coming down, but it's come up in the last couple of weeks. So the jobless claims, the new jobless claims in the US last week were So that's the week ending the 24th of July. They were around 1.4 million. So unemployment is still a major problem in the US. There's a lot of concern about the US economy. There's a great interview that Larry Summers just did with Bloomberg, which I'll link to in the notes to this video. And he makes a lot of really good points about the problems in the US. They've got this fiscal cliff. They've got their own fiscal cliff. Democrats and Republicans in Congress can't reach an agreement on what to do about it. In fact, they're going home for the weekend. Jake Tapper on CNN is absolutely outraged by it. He said, "What on earth is going on here?" It is hard to believe. So Larry Summers is concerned about that fiscal cliff. He's also concerned about perverse fiscal policy at the state and local level, because we're seeing that because of the declines in the economy and revenues for state and local governments, they're having to cut services. And that's going to reinforce the economic contraction. So it's perverse fiscal policy. One of the problems you see in the US is a long-standing problem, first identified by Alvin Hansen and Harvey Perloff in the 40s. It's the problem of states in the US, many of the states having balanced budget requirements in their constitutions, or there's been an act of the legislature which has required it, and that means that many are forced to run perverse fiscal policies. Anyway, you should watch the video interview with Larry Summers. I'll put a link to that. It was really good. Despite all this bad economic news in the US, the S&P 500, the stock market, has said whatever. We see very strange behaviour in financial markets, though there are some explanations that have been offered for this. And we'll get to those in a moment. So the question is, why are asset prices so high? One of the asset prices that is soaring and has reached new records is the gold price, which is approaching $2,000 an ounce. Okay, so why is this occurring? Gold is seen as a safe haven. That's one possible explanation. We know that there has been a lot of volatility this year due to the coronavirus and the economic costs of it. So the measure of volatility, this VIX index, that's still higher than normal. That's one possible explanation. The other that people are pointing to is the record low interest rates that we're seeing. This is associated with a big surge in the money supply. What we're seeing is that yields are low. There's a lot of money out there. And if people and institutions and investors are going to hold that money, then they'll want to receive high prices for whatever assets they're giving up. Check out that chart of the money supply in the US. That's a measure called M2, what that's capturing. It's capturing currency, it's capturing bank deposits. It's just taken off because of all of the actions the Federal Reserve has been doing, the quantitative easing, assisting the federal government in its emergency measures. I'll cover these more in a future video. There's quite a bit going on there. The money supply has just taken off. Absolutely incredible. So over 20, looks like about 23, 24% higher than it was 1 year ago in the US. And there are some investors who see this as another reason to invest in gold. They might be worried about inflation down the track, although with all of the spare capacity in the economy, inflation in the short term is not likely. The question is whether the Federal Reserve in the US and other central banks will be able to wind back the expansion of the money supply in the future if they need to, which if inflation's taking off, then they will have to take action down the track. But to do that through their open market operations, but at the moment, that's really nothing to worry about. In Australia, the Reserve Bank, as we know, is undertaking some quantitative easing, not to the same extent as the US, but our money supply has likewise increased, just not as much as in the US. That's a slightly broader measure than M2. That I couldn't find an M2 measure for Australia. That's M3. A broad measure of the money supply or the stock of money. I should cover what all those different definitions mean in a future video. Okay. I think that's just about it. There's a lot going on in the global economy at the moment. It's a really extraordinary time to be alive and to be an economist and to be following the data. It's just extraordinary. And of course, I'm very concerned about COVID-19 and what's happening here in Queensland and in Australia. We really need to get this under control and stop the spread so life can get back to normal. Josh Frydenberg the other day, if I remember correctly, said that the budget update he provided last week, those forecasts, they're too optimistic given what's happened this week. Things are changing so quickly. Just absolutely extraordinary. Okay, look, thanks for watching, and I hope to chat with you again soon and take you through the latest economic developments. Thank you.